Welcome back, everyone. This is our Gold Weekly Review. My name is Angelos Zitis, and this week's title is Gold Remains Near 1800. Gold's price held mostly steady in the latest daily sessions as traders may be in a wait-and-see position as important fundamentals around the world continue to unfold. We are currently in the midst of the current year's summer season, yet the markets seem to be undergoing substantial volatility, and especially gold's price. This report aims to briefly overview some of the most important fundamentals and possible gold price movers in the next days. We make a start with the relationship gold's price keeps with the US dollar. In the past days, we have seen the greenback heading lower, continuing the trend it has been in since the spring season. Gold, on the other hand, has gained tremendously in the past months and has performed 5 consecutive upward weeks until the 10th of July. It is evident that the two instruments continue to have an adverse relationship. However, in the past weeks, we have seen financial releases from the US confirming that the economy is currently on a rebound, but the USD continued to be weaker and gold became more expensive. This could continue to be the case for the next days also, mostly due to some worries that persist over the COVID-19 outbreak, which takes us to our next subject. The World Health Organization warned that a new outbreak is possible, as measures to control the virus may be loosening around the world, possibly displaying some carelessness. In the US, some states like California are ordering school closures, which confirms that cases have seen an increase in the past weeks. According to estimations, over 13 million people globally have been exposed to the virus. The data seems to support gold's price, as a precious metal usually displays its sensitivity towards fear and uncertainty. However, the market reaction could be an emotional momentum due to the fact that it's based on warnings, while the flare-ups in some US states may have been already known since the past weeks. On a separate note, tensions between China and the US seem unending at the moment, as yesterday the Trump administration disputed China's expansionary actions in the South Chinese Sea. Even though in the past China has faced opposition from the surrounding countries in the area on the matter, things seem to have escalated to the worst now as the US is seemingly choosing to take action. Even though the situation may not be as bad as the media reports, we are slowly seeing the US opposing China over a number of matters, including the trade war, Huawei's 5G network, the COVID-19 outbreak, the new Hong Kong laws, and now the Chinese expansionary tactics. Reporters covering the international scene expressed their worries over the matter as US military forces are getting involved in the area, and the uncertainty and worry over the situation could have a negative effect on the financial markets. Gold's price could be supported on any upcoming headlines, yet for the time being the two sides engage in a battle of words. As a closure, in the upcoming days we have a number of financial releases from the US that could create movement for gold's price. On Wednesday the 15th we get the industrial production reading, while on the following day we get the weekly initial jobless claims figure, the Philly Fed Business Index for July, and the retail sales reading for June. In addition, on Friday the 17th, we get the housing starts for June and the University of Michigan preliminary sentiment for July. Moving now to our technical analysis, please note this is gold's 1-hour chart. Gold has corrected lower since the past week when it reached the highest price in multiple years, which is noted in our chart as the R3 1818 resistance level. It eventually lowered to our R2 1810 line, which is a round number level that we had in mind in our previous analysis since we were aware of traders looking for round number levels. At the moment, gold is trading between our R1 1800 level and the S1 1786.30 support level. If gold's price is undertaken by a selling momentum, then the S1 1786.30 level that was seen last time on the 6th and 7th of July could be retested. Even lower, we have noted the S2 1774 line, and in a very strong bearish momentum, we have also noted the S3 1762.70 hurdle as a possible stop point. However, please note we have selected a 1-hour chart for today's analysis due to the fact that in today's European session, gold was under a selling trend That is also confirmed by our RSI indicator, which is running just above the 30 level in our chart. Now, this is the end of this report. Thank you very much for your time. And if you found something that you consider useful, make sure you apply it to your trading. Until next week, thank you and enjoy solid trading.